Hey YouTube, what's going on? Today we're going to discuss what's going on with these rates at the moment and the market. And I've been hearing a lot of people on YouTube saying that the rates are going up, they're skyrocketing, they're going through the roof. It's not true. Don't listen to them. We're going to go with the source that I trust, and we're going to see what they have to say about it. Let's check it out. This is an article put out by Freight Waves, and it came out 3 days ago. So let's get into the video and we'll discuss it as we go.
Just 3 Fuller analyzes the state of the U.S. truckload market. After 2 years of COVID-induced havoc in global freight markets, volatility has started to abate. FreightWave's view of the market has become clearer, and the picture isn't pretty. We think another sharp, painful downturn in the U.S. truckload market is imminent, and it could be as bad as 2019. March has been unusually soft in the truckload freight market, according to the Sonar Outbound Tender Volume Index, OTVI. Because this index measures actual truckload tenders in the contract market, it provides a very reliable indicator of market direction. March is typically a strong month for trucking, as shippers start to stock their shelves in preparation for summer. And late March normally gets a reliable end-of-quarter boost in volumes as shippers pump sales and reduce inventories. This year, we are not seeing that surge. In fact, March volumes are softer than at any point in 2021.
We just have to keep in mind that it is the first quarter, and it's always a hard time for trucking.
The OTV in blue is currently sitting at 13,571. It was 15,531 at the end of January and 15,859 a year ago. The orange line is 2021. What is causing soft truckload volumes? More than likely, the lower volumes are due to a major consumer slowdown. Inflation that began in 2020, combined with the surge in fuel prices related to increased inflation and the Russian invasion of Ukraine, have made consumers move to the sidelines. In addition to monitoring Sonar data, FreightWaves analysts also conduct channel checks through our network. Market participants are confirming what FreightWaves analysts are seeing in the data. Spot rates are falling fast and volumes are dropping.
So the data is there, and we could see it clear as day that the volume is dropping. And that's to be expected when nobody has any money to spend. Hopefully we can get these fuel prices down so we can get more money in the consumer's pocket, and that could help keep these rates from dropping further.
What does this mean for the rest of 2022? There are many reasons to believe that the freight market slowdown will continue, and that an oversupply of trucking capacity, particularly in the spot market, will pull rates even lower. Consumer spending is shifting away from physical goods. Freight is travel and entertainment do not drive much freight, so any dollar spent on experiences means money isn't spent on cargo. After 2 years of massive consumption of physical goods, consumers are pausing their spending. The COVID surge is largely behind us, and people are starting to shift their spending away from physical goods to travel and entertainment, which will take a much larger percentage of disposable spending than we have seen over the past 2 years. The trend toward intensive goods spending has taken longer than many initially expected to reverse itself, but consumer spending data confirms that a material shift is taking place. February retail sales were nearly flat at 0.3%, missing.
I'm going to agree with this, but I'm going to also disagree with this, because consumers have to purchase certain items regardless of what they're paying for fuel or what they're paying for everything else. There are certain things we need to have in order to live, food being one of the number one items that we're going to have to purchase for us and for our family, no matter what's going on with inflation and or with the fuel prices. Let me play this video of Joe Biden talking about food shortages are coming. Watch this.
Food shortage. Yes, we did. We still talk about food shortages, and it's going to be real. The price of these sanctions is not just imposed upon Russia; it's imposed upon an awful lot of countries as well, including European countries and our country as well. And because both Russia and Ukraine have been the breadbasket of Europe in terms of wheat, for example. Just give one example.
So that video came out also 3 days ago, and what do you think, everyone? What do you think is going to happen when everybody realizes that we're having a food shortage? They're going to scramble, and they're going to empty all the shelves out in a hurry, and I do believe that will bring volume back up, because the shelves will be empty and we will be forced to get more trucks moving again to restock the shelves.
A rash of trucking bankruptcies are on the way, and it will be Bloodbath 2.0. Trucking has enjoyed the largest number of new entrants in its history over the past 2 years. New fleet registrations were up to 20,166 last month alone. This is unprecedented. The last peak was in August 2019. There were 9,511 new trucking fleets, and that was in the middle of one of the weakest freight markets in history. New trucking registrations tend to lag market conditions, so we can expect new fleets to continue to enter the market even after things soften. This will make the downturn that much worse. Many of the operators are unseasoned and inexperienced. They are unlikely to have ever seen a market downturn, much less run a business in the middle of one. They also bought their trucks and hired their drivers at the top of the market. These same drivers that were chasing high spot volumes will find fewer and fewer opportunities in the market. They will either leave the trucking market or move to trucking companies that have more consistent freight, leaving those trucks unseen.
Unfortunately, what they're saying there is true. Anyone who's been looking at the cost of equipment lately, it's just ridiculous. I mean, half a 500,000 mile truck right now is going to run you in the $120,000 range. So, and there is a lot of people coming in right now because the rates are still decent at the moment. They haven't dropped to the point of no return yet, but just like what happened in 2019, a lot of companies will fail. And this is why it's so important for us who are working on the spot market to stand together and say no to cheap freight. If we fight with them and tell them no, we're not going to haul it for that, then that's not what the price would be. And it doesn't even matter what the volume is. They still have to move the loads that they have, regardless of what the volume is. And it's up to us to say no and only take an acceptable rate so that we don't have a bunch of companies going bankrupt like they did in 2019. This video is not to scare anyone away. I don't want to discourage anyone from trying to become an owner-operator and be successful. I've been through this before in 2019 with low volume, and I got through it. It was hard, but you just have to be picky about which loads you accept and don't take anything that's going to be unprofitable. Thank you guys for watching. If you want to check out the whole article, go to Freight Waves and look at it. I didn't show all of it because I didn't want this video to be too long. But I appreciate you. Have a great day.